On Business Incorporated today, South Africa rand falls to a 6-month low. Taxation in Egypt goes digital. And Angola joins China-Africa Economic and Trade Cooperation Innovation Demonstration Park. Hello and welcome to the program. I'm Ini John Mekwa. Let's start off with market numbers on the African continent. It was more of negative sentiments at intraday. It was just Nigeria's all-share index that was mildly positive. South Africa is still reacting to the 5-hour glitch 2 days ago. The all-share index is still bearish, down 0.55%. Egypt follows suit, losing almost 1%, while Kenya closed negative 0.79%. In the Middle East, markets are closed on Friday, but most of the major markets ended trading negative. Abu Dhabi lost almost 1%. Same with Dubai. Elsewhere, Saudi Arabia shed 1.26%, while Qatar added 0.34%. We move to Europe now, where stocks turned lower as the trading session developed on Friday morning amid concerns over monetary policy. Delta COVID variants and China's tech crackdown linger. The stock 600 traded 43 basis points lower shortly after markets opened in the continent. The index is on track for its worst week since February. But we have Conrad joining us now to give us the details. Hello, Conrad. Good afternoon.
Good afternoon, Ini. Great to be back last time this week.
Last time this week. And in Europe, the stock markets have come under significant pressure this week. The German index DAX is trading about 2% below the record high it had marked on Friday last week. How much of a bad mood reason is this for traders and where you are?
You know, I think the bad mood is really limited, given that this week monetary policy makers in the United States were reported to seriously consider tapering their money supply. A 2% drop of the stock market here in Germany is really neglectable, or, you know, it's adequate. Of course, the earnings outlooks of companies suffer when refinancing costs get higher, but this is not going to, you know, kill companies. On the contrary, the monetary policy makers are doing this because they think the economy in the United States, the economic recovery is strong enough to be able to live with this. And actually, not only in the US, the economy is strong. The recovery is happening here in Europe as well.
And almost every sector of German industry is struggling with supply bottlenecks, threatening the country's economic recovery. That's the conclusion of a new study by Association of German Chambers of Industry and Commerce. Why is this such a threat to the recovery?
You know, it puts in jeopardy the usual ways how turnover and profits are calculated. Today, it was reported here from our statistics office in Germany that producer prices have risen twice as much as analysts had forecast. And of course, this also has to do with the scarcity of certain goods. The problem for businesses is that they need reliable data to be able to calculate their own prices. But that's something that has really become difficult. What businesses are forced now to do is to negotiate and renegotiate their own prices with their customers. And of course, that's not something customers like. That's the price side. And the supply side, of course, is negative as well. If you are not able to finish your own goods because you don't have enough raw materials and materials to do so, this too is not something to make your customers happy because you cannot deliver on time.
Yeah. Well, Tesla has presented its Model Y in Germany. What is this? Is this a car made in Germany?
No, it's not. It's made in China and it has been imported to Germany. Originally, the plan of Tesla was to have the factory it's building near Berlin ready by July so that the Model Y could be built there and then be delivered. All this was delayed several times for several reasons. One of them is the pandemic. The other one is the relatively slow way how permissions are giving for building and planning here in Germany. But that's only part of the picture. It has to be said, Tesla changed the plans several times. They became larger and larger. At several occasions, the team around Elon Musk wanted something new. And this was a challenge for the people who are in charge of permitting, planning and building here in Germany. I'm afraid sometimes the cliche is right. Sometimes in Germany things really go the German way, and that means a significant amount of attention to detail is paid in processes like this.
Okay. All right. Thank you so much, Conrad, for giving us updates from Frankfurt. And do enjoy your weekend.
The same to you, Ini. Bye-bye.
Bye-bye. So from Europe, let's go to the UK. Supermarket group Morrisons has accepted an improved £7 billion takeover bid from US private equity group Clayton, Dublin Rise. It means it has dropped its recommendation for investors to accept a previous £6.7 billion offer from a consortium led by another US-based investment group, Fortress. The board of Morrisons is recommending shareholders accept this new bid. Fortress says it was considering its options. It's the latest step in a bidding war for the grocer, which has almost 500 shops and more than 110,000 staff. Fortress has also urged Morrisons shareholders to take no action on CD&R's agreed bid, which will require the approval at a meeting in October. Let's go to the markets now. The FTSE 100 is on track for its worst week since January. Today, the index is being dragged down by AstraZeneca after the drug maker halted a late-stage clinical trial and news that retail sales in Great Britain fell sharply this morning. We talked about that. AstraZeneca shares fell 1% after it announced that its newly acquired Alexion division, a rare disease specialist, was stopping a late-stage trial of a treatment for a rare fatal disease. However, it also released positive test results from an antibody treatment to prevent COVID-19. The FTSE All share was down 0.1%. FTSE 100 was also down 0.15%, while the FTSE 250 dipped 0.09%. In the currencies market, the pound was down against the dollar 0.15%, same against the euro, and 0.24 against the Japanese yen. In Asia, Pacific fell on Friday as China left its benchmark lending rate unchanged. Hong Kong's Hang Seng Index plunged 1.84% to close at 24,849.72, with Friday's losses leaving the index more than 20% lower from its mid-February high. Most Chinese tech shares in Hong Kong continue to see another day of heavy losses as regulatory uncertainty surrounding the sector lingered. Mainland Chinese stocks also closed lower as the Shanghai Composite declined 1.1% to 3,427.33, and the Shenzhen Component slipped 1.6% to 14,253.53. The Nikkei 225 in Japan fell also 0.98% to close at 27,013.25. Other topics in their shed 0.87% to end the trading at 1,880.68. Japanese automaker shares continue to see losses on Friday, with Toyota Motor falling over 4% and Nissan Motor dropped more than 7%. Honda Motor declined almost 5%. Elsewhere, South Korea's Kospi declined 1.2%, while the S&P 200 in Australia closed fractionally lower at 7,460.90. MCSI Broadest Index of Asia-Pacific shares outside Japan also slipped 1.13%. To Wall Street now, stock futures were in the negative territory this morning after a choppy regular trading session ended with the S&P 500 slightly in the green. Dow Jones Industrial Average futures dropped 105 points. Futures on the S&P 500 and Nasdaq 100 futures were also both in the negative territory. After volatile trading, the S&P 500 closed 0.1% higher. The Nasdaq Composite added 0.1%. The Dow bucked and trended and shed 66.57%. All three major indexes were on track to close the week lower. The S&P 500 and the Dow were both on track to post their worst weekly performances since June, while the Nasdaq is set to see its worst week since May the second quarter earnings season is largely in the rear view mirror, but a few companies are still on deck. In the oil markets now, our prices came off 3-month lows on Friday, but we're on track for a weekly decline of around 6% as new lockdowns in countries with low vaccination rates facing surging cases of the Delta variant dim the outlook for fuel demand. Broader investor risk aversion also weighed on oil, with the US dollar jumping to a 9-month high on signs the US Federal Reserve is considering reducing stimulus this year. US West Texas Intermediate crude futures for September, which is due to expire on Friday, rose 35 cents to $64 a barrel after sliding 2.7% yesterday. The more active October contracts rose 33 cents to $63.83 a barrel. Brent crude futures rose 27 cents to $66.72 a barrel after dropping 2.6% yesterday. Meanwhile, Delta variant outbreaks in Australia and New Zealand have sparked strict lockdowns. The approaching end of the U.S. peak gasoline demand season and end of summer holidays in Europe and the United States are also set to sap oil demand. In the metals market now, gold prices were flat on Friday as a firmer dollar eclipsed support from rising anxiety over increasing cases of coronavirus variant that could delay economic recovery. Spot gold was flat at $1,780.43 per ounce, while U.S. gold futures was a little change at $1,782.40. Silver rose 0.1% to $23.25 per ounce and was headed for third straight weekly decline. Platinum gained 0.5% to $977.95, but it's down 4.6% for the week so far. Palladium was also up 0.7% at $2,328.19. Metal was headed for its worst weekly performance since March 2020, falling 12.2%. Let's go to South Africa now, where the rand fell to a 6-month low and breached the 15-rand mark in the face of a stronger dollar this week. The rand, which had been strengthening its last few months, even breaking the 14-rand mark, slumped to 15 rand 24 cents to the greenback on opening of trade. South Africa's currency has been hampered by fears of a slowdown in global growth because of the Delta variant and investor concerns about a forecast of fourth wave of COVID-19 infections later this year.
The rand at this current time is not being affected by anything that is happening locally or any of the sentiment. I think there may have been previous assertions that something would happen to the rand post the cabinet reshuffle. But currently what we're seeing is mostly associated to a strengthening US dollar. The US dollar has started to rally and strengthen after the Federal Reserve made an announcement that there would possibly be 2 rate hikes in 2023. And traditionally, when interest rates go up in the US, the dollar rallies, and then what we tend to see from market's perspective is a weakening of the emerging market currencies. So that is predominantly why the rand has gone in that direction. And then in terms of what we're seeing in the market, I think currently the markets have remained stable. We're anticipating that we'll see an increased appetite in taking up investments in the equity market. But we also then expect that into the long term, when the interest rates start to lift in the US, that may start to affect the local bond markets in terms of more investors wanting to have access to a higher return on a dollar basis.
Oh, that was economist Langa Madoko being interviewed by a correspondent in South Africa, Brian Pugeni, about the fall of the rand to a 6-month low. Well, we'll take a break now. When we come back after the break, we have more stories from the African continent. Do stay with us. You're welcome back. You're still watching Business Incorporated on Channels Television. Now in Zambia, the newly elected president, Hakainde Hichilema, says he plans to unveil a set of economic policies aimed at solving the mineral-rich country's deep economic problems after he takes office. Meanwhile, copper producers are ready to start expansion projects worth $2 billion in the country next year. if the industry can reach an agreement on royalties with the president-elect. We'll be discussing this and some other issues coming up after the election at Zambia with Martha Wukamelo, a researcher, Public Finance Management Center for Trade and Policy Development. So good to have you. Thank you so much for joining us, Mr. Martha.
Thank you so much for having me, and thank you.
Yeah. So what does the President Hichilema's mean? What does it mean for Zambians? We know there was a lot of controversy with the former president and all that. What does it mean?
Well, looking at where Zambia is coming from, I think the victory of Mr. Hakainde Hichilema really is one that brings hope to the Zambians. It's one that gives that sense of hope that the economy is likely to rebound. We look at the environment within which Zambia went to the polls. This is an environment where Zambia recorded a deteriorated macroeconomic outlook in the year 2020, with economic growth contracting by about 3%. The cost of living also rising rapidly, with inflation going in excess of 23%. And the biggest problem in the country has been the huge stock of public debt. We did see the outgoing government trying to make efforts in terms of restructuring the debt, but those efforts did not yield the desired results. So it is hoped by many Zambians that Mr. Hichilema is going to be the man that will be able to pull our creditors to the negotiating table and try to renegotiate our public debt, restructure the debt to create some fiscal space within the national budget to steer economic recovery. Thank you.
Yeah, a lot of expectations placed on his shoulder at this time. Do we have an idea of what policies or plans he has? For instance, like you said, to get the country out of debt, to bring back economy recovery into the country. Do we have an idea of his perspective or line direction of policies?
Okay, so what we have now are basically statements of intent from the manifesto of the party in government, the United Party for National Development. But we do expect to see a little bit more in terms of the policy direction this coming Tuesday during the inauguration ceremony, as the president-elect delivers his inaugural speech. We expect him to set a tone in terms of the policy direction. But some of the issues that he has highlighted and that we expect him to bring to the table is the return of investor confidence and also the confidence of the creditors in our macroeconomic management strategy, which is something that we saw lacking in the previous government. There's an issue of transparency and accountability in as far as the utilization of public resources is concerned. This is an issue that kept on coming as well in the previous government. This is one thing that Zambians expect the new president to address, the issues of corruption, to ensure that there are no leakages to the treasury, and to ensure that we have more and more policies that create an environment for small businesses to thrive and to steer economic activity, that will ensure that various economic agents are able to contribute to the domestic resource envelope, reduce the need for the country to go back on the market and borrow more in terms of financing its various government programs.
Well, a whole lot of expectations there. We do hope that he keeps to his promises. But what is his stance regarding the Zambian mines and mining industry?
Okay, so in terms of the mining industry, again, we are yet to really see the actual policy direction that the new government will take. But what we've heard so far are issues around the need to strike a balance between investors that come in to operate these mines and the Zambian people. To understand where we're coming from in terms of the mining industry, you'd have to appreciate that we're coming from an environment where in the 1960s to 1990s, we had these mines being run by government until we privatized the mines around early 1990s. And now we saw the outgoing government towards the end of their tenure trying to come up with a strategy to repossess some of the mines. But what we've heard the president-elect speaking about, he has emphasized the need to create a fiscal environment, a fiscal regime that is going to ensure that the mining sector operates profitably, so that those running the mines are benefiting just as much as Zambia benefits from the proceeds of the mining sector. Just to mention that the mining sector, as it stands, contributes in excess of 70% of the foreign exchange that Zambia earns at the moment. So there's a lot of expectation in terms of what the president-elect needs to do in the sector to support productivity, but also to diversify, to reduce the reliance of the country on copper, whose prices we know are cyclic. They go up and go down. So there's also need to sort of diversify. There was a discovery of other minerals, such as gold, for instance, within last year and the other year, and that's an area that really needs to be explored by investors. And we do hope that the president-elect creates an environment that is going to ensure that our mining sector also explores these other minerals to reduce the over-reliance of the economy on copper proceeds alone.
Yeah, we certainly do hope that with you also, and we wish you all the best as you guys, settle in with the new president. Thank you so much, Mr. Ukamelo Mata, researcher, Public Finance Management Center for Trade Policy and Development in Zambia, and enjoy your weekend.
Pleasure is mine. Thank you so much.
So we move to Egypt now, where digital transformation and updating taking place at the Egyptian Tax Authority are facilitating the submission of tax returns and other operations digitally. According to Mr. Al-Sadid, Administrative Affairs for the ETA, the changes to be in place next January will see digital procedures introduced for large and medium-sized taxpayers and large private businesses. This will include registration, the submission of tax returns, and e-payments. Further, that operations comprising 64 procedures are to be digitalized, as well as the e-billing system, which will allow taxpayers to be more closely monitored, and larger taxpayers are already using the new system, while smaller ones will gradually follow the ETA in creating a unified system that will allow taxpayers to have one file, one tax number, and to finalize all procedures in one place. Africa Industrial Park to boost trade ties with the Chamber of Commerce and Industry of Angola, and its memorandum of understanding that has been signed with the China-Africa Economic and Trade Cooperation Innovation Demonstration Park to strengthen economic cooperation, technology transfer, and investment promotion. At the signing, the chairman said that the partnership aims at transferring technology, exchanging experience, training, and promoting with the world's largest consumer markets in that's Angola to China. Well, we move to Tanzania now, where Tanzania and the World Bank have struck a 2.7 trillion Tanzanian shillings concessionally loan deal to finance 5 key projects in mainland and semi-autonomous Zanzibar Islands. The projects are higher education for economic transformation, which will receive $982.1 billion, Tanzania roads to inclusion and socio-economic opportunities, 693.2 billion Tanzanian shillings, while 346.6 billion Tanzanian shillings will be directed to digital Tanzania projects. Speaking during the signing ceremony, which took place in Dar es Salaam, the Minister of Finance and Planning said that the signed projects are in line with the country's third 5-year development plan. Well, that's it on the program for today and for the week. Thank you so much for watching. I'm Ini John Mekwa.